welcome to another episode of Trading Kaki's weekly series. It has been a huge week this week and we're excited to bring to you updates from the week as well as our new stock picks and review of our previous week's stock picks. First and foremost, we have inflation or consumer price index, which is the biggest economic event this week. It did come in a little bit higher than what market had expected. However, this is not necessarily a sign that inflation is not letting up, as it was the lowest annual reading since October 2021. The biggest slowdown was seen in food prices and used cars and trucks, and on the other hand, we have the biggest increases in cost of shelter and energy. Another thing to note is that the Bureau Labour of Statistics, which is basically the governing body that measures the CPI, did change their weightings in how they measure inflation. And now we see food prices and energy prices, which are typically the two most volatile items, having a lower weighting in CPI numbers, and housing having a slightly heavier weighting. Retail sales was a shocker to the market. It came in at almost double of what the market had expected. Retail sales are not adjusted for inflation, but even if you strip the inflation effect out, you still get a much higher number than expected. This shows that consumers are still spending. Building permits, which are basically the construction approvals needed for housing projects, fell below market expectations and is now close to the lowest since May 2020. This is a good leading indicator into where the housing demand in the US is going, and as you would know, the housing sector is very closely related to the Fed rate hike cycle. In the US, we have the single family, which comprises the bulk of the housing projects, as well as the multifamily, which are about 5 units or more. So the multifamily segment is more volatile and is very closely related to where the rental accommodation sector is heading. We covered the consumer price index earlier, and now on the producer side of things, the PPI also increased more than what the market had expected. This was mostly led by a surge in gas prices, and the lowest increases in prices were seen in fresh and dry vegetables. These are the key macro events coming up next week. Most prominently, we have the FOMC meeting minutes and the GDP numbers coming out on Thursday. Just to note that on Monday, markets are closed as it's public holiday in the US. We had a really choppy week this week. There were two main things going on. First was the fact that it was OPEC's week, which is the third week of every month where options expire. And secondly, we had the CPI numbers coming in. The SPX fell below the upward channel, as you can see here, and closed at the support level of 4076, which is a 20-day EMA. The next support level we see would be the 4005 level. The Dow Jones remained flat and 34.5 remains a strong resistance level. We have identified this level for about the third week now, and we have identified the next two support levels. The Nasdaq tested the 200-day EMA, which is the 11680 level, and closed slightly above it. As of Friday, the 20-day EMA crossed slightly above the 200-day EMA. The Russell 2000, which are the small and mid-cap stocks, outperformed the rest of the indices this week as retail investors were more bullish. The volatility index dipped earlier this week and rebounded in the last trading days. Interestingly, there was a piece of news that a mysterious trader, nicknamed the 50-cent VIX trader, paid $5 billion in call option contracts to bet that the VIX was surge to 50 in May. The very next day, there was a similar purchase at the same strike and the same expiry at $2.6 million. So this guy is nicknamed the 50-cent VIX trader as he paid 50 cents each for 100,000 call contracts for his first purchase. And if these two purchases are made by the same person or this 50-cent VIX trader, basically this guy is betting close to $8 million that the VIX will surge to 50 in May. The dollar index went above 104 and tested the 200-day EMA, which is 104.7, and closed slightly below that. The next resistance level is 104.7, while the next support levels are 103.7 or 103.1. China-US tensions showed no signs of easing after the whole spy balloon incident. It wiped out most of the gains year to date on the Golden Dragon China Index, and the next support levels are at 7410 and 7235. Spreads between the 2-year yields and the longer-term yields continued to widen, and this shows that recession concerns remain elevated. There was a spike in cryptocurrencies this week, and Bitcoin closed at the highest since last June, and Ethereum closed at the highest since last September. The top winners for this week are utilities, industrials, and energy. As you can observe, these are more of the defensive or cyclical stocks which are typically favoured more by investors, especially with the resurgence of inflation concerns. We'll cover 4 key earnings this week: Airbnb, Roblox, DraftKings, and Applied Materials. Airbnb, which is one of our stock picks 2 weeks ago, surged more than 14% on the day of its earnings on better than expected revenue and earnings. The first quarter is really looking promising with the optimistic forward booking numbers. On top of that, we have the reopening of borders in China, which will have a positive spillover effect not just in the APAC region but also globally. Roblox surged more than 26% on the day of its earnings. Its average daily active users were up 20% year on year, and a total of 12.8 billion hours were engaged in Roblox just during the fourth quarter. Even though this is in part due to more people staying home during COVID, even with COVID blowing over, gaming is typically a sticky business, so the user base for Roblox will continue to be resilient and solid. On top of that, the demand for gaming accessories will be recovering with the new chip hardware releases late last year. DraftKings surged close to 20% on the day of its earnings, not just on better than expected earnings, but also the fact that the management raised its outlook for FY 2023. It is also the most downloaded sportsbook app during Super Bowl Sunday. With sports betting breaking records in 2022, there will be more customer flow through to the app. On top of that, there will be more partnerships with sports events, with the company expanding its footprint to other cities and regions. Applied Materials, on the other hand, closed flat with the weakening global chip demand. Overall, we see a gloomy outlook, especially in the near term, for the semiconductor industry, as the US has restricted semiconductor sales to China, so the company will not be benefiting from the China reopening market. These are the upcoming earnings next week. The key ones to look for will be Coinbase, Baidu, Nvidia, and Baba. We have 2 stock picks for you next week, Coinbase and Silvergate Capital. There are 2 key catalysts for Coinbase. First will be the rally of Bitcoin. Bitcoin has already risen close to 50% year to date. It has surpassed the 20,000 level and has recently tested the 25,000 mark. With Bitcoin set to have the best month since June 2022, Coinbase will directly benefit from the continued rally in Bitcoin. The second catalyst would be a potential short squeeze. So a short squeeze situation happens when short sellers are forced to close out their positions with anticipated increase in stock prices. Coinbase already has a short interest ratio of 2.15 and a short percentage float of 25%. This could result in a potential short squeeze situation. Our recommended entry is at $62 with a target price of $80. This would yield a potential profit of 29%, and our stop loss price is set at $55. Our other stock pick is Silvergate Capital, which is a crypto bank. So the 2 key catalysts that we identified earlier for Coinbase also applies for Silvergate, which is the Bitcoin rally and the potential short squeeze. In terms of short squeeze, it is the most shorted stock in the US market with a short percentage float of 66%. Our recommended entry for Silvergate would be 17.25 with a target price of 25. This would yield a potential profit of 45%, and our stop loss is set at 15.5. We'll do a review of our previous week's stock picks, which will be Airbnb, Enphase, and CF Industries. Airbnb hit our target price of $130 and climbed even higher with a weekly high of $144. Enphase hit our entry of $200, and in fact it bounced right off our entry and climbed 9% to the weekly high. CF Industries, on the other hand, almost hit our stop loss price of $82. This week they released their earnings, which showed that outlook is not as resilient as expected. That's all we have for this week. We hope you enjoyed the content. Please like, subscribe, and stay tuned for our next release.